why the GameStop stock is going up again. In recent days, since January, the known widely and usually unfavorably favorite of Robinhood traders, GameStop, surged higher than what could have been expected of it. GameStop may be taking advantage of this vertiginous exploit in its shares this year on the back of a Reddit-driven retail trading hysteria. It has been an insane rollercoaster ride for its stock, and it is not yet half of the year. In this video, we will be telling you all about why GameStop is going up again. Without further ado, prepare your mind, and let's hop on this ride. What do you think happens when people have written off a company and out of the blue, the company's stock price blew off of its roof and skyrocketed for no obvious reasons by close to 180%? You know, there definitely would be a lot of buzz about it. That is what's happening with GameStop, a gaming retailer, antiquity from the distant past of pre-internet that makes people go to the mall to get the latest game like Call of Duty instead of directly downloading it to their console or making a pre-order, brought in and modernized. GameStop as a business has been going down the slopes for some time now. The high-speed internet enabling gamers to download the latest game titles to their consoles is one of the causes of GameStop's slow decline. One of GameStop's saving grace is its business in used games, which is cheaper and simply not downloadable. It is also because of the increasing demands for Xbox Series X and S consoles and the new PlayStation 5, because it is one of the smattering numbers of retailers approved for their sale. Generally, GameStop was going out of business. Its extra lives were running out, its candle wicks were burning low, and there was an urgent need to do something. Anything to save the company from going under. Some of the key points regarding the company include declined sales growth, the collapse of the total shareholders' equity, negative net income, weak free cash flow growth, non-existent long-term growth, increased debt level, and others that are not fully proclaimed. The seeming and assumed certainty of the end of GameStop made it a apparent target for short sellers. Do you know it is often riskier to short a stock than owning one? By owning a stock, the maximum amount that you could possibly lose is whatever or the exact amount that you invested. For instance, if a person buys a Tesla worth $20 and it crashes to $0, the loss incurred is $20. But a maximum loss in short selling is theoretically without limit, because the company's value has no cap. Let's take, for instance, that a particular person short sells Tesla at a price of $20, and it was thereafter an announcement was made by Elon Musk about one of his new assets causing Tesla's stock to strike $1,000. What do you think will happen to such a person? The person is going to lose a whopping sum of $980. Yeah. That's a big deal. Though the short sellers have their means of defending against this huge loss, if a company being shortened all of a sudden shoots up abruptly in value, the short sellers can buy back the shares at a price slightly higher instead of risking a bigger loss. Take for instance that a person shorts Tesla at $30 and it moves up to $40. The person may decide to let go of the $10 loss instead of taking the chance of fate worse than that. But when there is a large number of short sellers shorting a particular stock that skyrockets suddenly, it can initiate a term known as short squeeze, meaning that short sellers rush to give back to their lenders by buying up more shares. This thereby reduces supply and increases demand and increases the price, indisputably making short sellers buy more shares, and so on. This brutal cycle is something that benefits the investors that own the stock before the squeeze happened, but it can also destroy short sellers. As of the latest filings by CNBC, GameStop was the most shorted stock on the US markets. March stock shoot up. Just before giving up quickly a third of its value, at the early start of March, GameStop shares leaped from something around $104 to a soaring amount of around $347 on the 10th day of March. This price action doesn't necessarily save the company from the pit of debt it was sinking into. The rally in March is more matter of fact than what took place in January, when separate individual investors joined hands together and thereby sending it to nearly 1,200% the shares of struggling retailers in a short amount of time or a few days, but only to see the gains of the shares become less and fade away gradually. On the other hand, fellow meme stock AMC has benefited from the renewed interest in GameStop, but it seems there is more to this bull case. Do the meme stock gains make sense? Just because there's a positive story that is being told and going around about a stock does not exactly mean it makes sense to buy the stock. Aside from all these things, something else is going on. The nature of speculation. This is a hypothesis that has been formed by conjecturing or speculating or supposition, which is usually with little hard evidence and makes some people want to buy more stocks when other people are doing so. Some are following the crowd blindly without any sight of what is happening or will really happen. Charles Kindleberger wrote in Manias, Panics, and Crashes that mob psychology or hysteria is well established as an occasional deviation from rational behavior. We have its elements in many economic models. The demonstration effect, which leads developing countries to adopt consumption standards before their capacity to produce for themselves, keeping up with the Joneses in consumption, refusing when income declines to cut consumption symmetrically with these increases in consumption that occurred when income rose, the Duesenberry effect. This directly leads us to Reddit, specifically Reddit Wallstreetbets. r/Wallstreetbets is an interesting, fascinating, but yet a terrifying forum for investors and short sellers or stock followers. When the influential people in r/Wallstreetbets learned that an astounding amount of the shares of GameStop were being shorted, perhaps that could have made it possible to convince a decent number of Redditors to buy up an accumulation of GameStop stock, increasing its value to a level enough to initiate a short squeeze, abruptly shooting the stock off the roof to the benefits of the early investors or buyers who bought it early. The r/Wallstreetbets community has over 2 million subscribers on their forum and has made GameStop a meme-like stock. It has a weird value because few people thought pretending that it has value would be fun and possibly profitable made other people want to join in on the fun and profit as well. And the others who wanted to squeeze hedge funds that had shortened the stock and all of a sudden it was very valuable. Really weird. Now this is the part where we gave our viewers a little challenge. Let's see how fast it takes you to hit that subscribe button with your little finger. The fastest fingers will have good luck trading for the rest of the year. Let us know how long that took you. Now, back to GameStop. Mr. Ryan Cohen, popularly known as Papa Cohen, a major shareholder in GameStop, also appointed as a board member to address and find solutions to the company's fortunes going down the drain, is a significant holder in the Reddit company. His tweets weigh a lot in this stock business and have a great pull for the stock followers. A certain tweet from him on the evening of the 24th of February was of a McDonald's ice cream cone, which was accompanied by the emojis of a frog. Not long after the tweet did, the surge of the shares began. There's not a definite connection between the tweet and the stock price, but it can be said to have given the GME shares new attention and focus. On the 1st of March, GameStop opened at 9:30 in the morning, Eastern Standard Time, at $104.54, but by 9:37 a.m. it went up to $109.42, following a few volatile weeks. On the 10th of March, GameStop shares rapidly moved up and were stopped twice for their explosiveness ahead of the closing bell. At the end of the market, the gaming retailer stock was priced at $91.71, a near 104% higher than the previous day's market. But in less than 1 hour after the closing bell of the market, the stock still continued shooting up, gaining nearly 90% in after-hours trading. Having that feeling of deja vu yet? GameStop advancement development. GameStop announced recently, for the first 9 weeks of 2021's fiscal year, its preliminary sales results. According to them, their global sales increased. For the first 9 weeks of fiscal 2021, total global sales increased approximately 11% from the 9 weeks ended April 4th, 2021. February, the 4-week period ended February 27th, 2021. Total global sales increased approximately 5.3% from the 4 weeks ended February 29th, 2020. In March, the 5 weeks ended April 2nd, 2021, total global sales increased approximately 18% from the 5-week period ended April 4th, 2020. GameStop shares went down by 12% in April after the video game retailer announced that it might sell its stocks worth up to $1 billion. It said it would sell its shares worth up to $3.5 million and use the yield to increase the speed of the shift in its business model to e-commerce in a redevelopment led by one of its top shareholders, Ryan Cohen. According to the investor relations press that was released on the 13th of April, it said, GameStop today issued an irrevocable notice of redemption to redeem $216.4 million in principal amount of its 10% senior notes due 2023 on April 30th, 2021. The redevelopment of the company has spurred a shakeup of management. According to their April statement, the CEO, George Sherman, is stepping down this June or July of this year, and GameStop's board is seeking a replacement. This shakeup also includes 8 other directors of GameStop's board who may be stepping down in June. GameStop hopes to keep on fortifying its balance sheet and back up the continued transformation of the company to a more digital gaming business. Around April ending, GameStop eventually did sell at approximately $157 per share, 3.5 million shares, and generated roughly around $551 million in cash proceeds, and it is said will be used in the payment of the remainder of its long-term debt and used in funding its digital growth opening move. While many dismissed the initial run in the stock to a short squeeze scenario, GME has actually held up very well after the fireworks. The stock hasn't traded below $100 since early March, and at this point, there's actually a case to be made for higher low support over the past couple months. Though many discharged off the early run and shoot up in the GameStop stock to a short squeeze setting, GME has kept up fairly well even after the skyrockets and fireworks not trading less than $100 since the beginning of March. The stock till now continues to trade above $150 per share compared to its $20 per share that it was on at the start of the year. Perhaps the short squeeze, after all, is the turning point that GameStop needed, yeah? That's it for today, guys. If you enjoyed today's video, make sure you hit the like and subscribe buttons to follow us for more updates, and don't forget to turn on the notification bell.